used to campaign this project. Sabi ko nga, baka kayo ang sumuko sa dami na may gustong makapitan ng kuryente. Baka kayo ay matuwa ng lubusan kapag narinig nyo, lahat ay excited sa project na ito. Press start.
Marks the commencement of construction for our first hybrid solar, diesel, and battery power plant and microgrid. Provide Barangay Kabayugan with 24/7 electricity.
The sun is a gift from God. The sun gives the solar energy to this project. I tell you solemnly, this project is in line with the will of God. That's why I kept on congratulating each and every one of you, including myself. You are a blessing in this place. You are a blessing in the environment.
Alam naman po natin na isa sa mga pangunahing pangangailangan ng isang komunidad, maliban po sa tubig ay ilaw o kuryente.
Oh, this is fire!
It is our expectation that this project, providing the power infrastructure, should attract more tourism investment and more arrivals, which among being a UNESCO World Heritage Site known for its underground river. Sabi po ay masayang-masaya. Tagal po namin nagantay, pero hindi po kami nawala ng pag-asa. So, sa ngayon po, nandito po tayo sa foundation ng isang kita na ho natin yung kasiparan po yung mga pangarap.
I'll be the first to say the words I love you, but I need to hear it echo. I need to hear it echo back from you. I need to hear it echo. I need to hear it echo back from you.
Top of the program would be next correct turn seat back to Paleco. This is back to Paleco. We will open the time capsule again. And how far we have.
I don't know. I'll be the first to say the words I love you. I love you, but I need to hear it echo. I need to hear it echo back from you. I need to hear it echo. I need to hear close to me, but there's something in the way.
If you have a struggle as well,
I'm in love and I think you feel the same thing, but it's the one thing I can't say. How far away, how close are we together? Don't know. Just one more day, just one more forever. I don't know. I'll be the first to say
have a round of applause.
I love you. I love you.
So it's not a sectoral project.
But I need to hear it echo. I need to hear it echo back. I need to hear it echo. I need to hear it echo back. I'll say that I love you. I'll say that I love you. If you say you love me too. I'll say that I love you. I'll say that I love you. If you say you love me too.
Alright? Puno na po yung nangguhanan nyo, but because this is perfect. I have only one request. 9 months from now is January. Why not make it before Christmas, December 2018? Di ba, Kapitan? Let us give the little children of Kabayugan, the experience of looking at Christmas lights that turns on and off this Christmas. This will be a happy Christmas, not only for the children, but all the people of Kabayugan and all the guests that will be coming here to Kabayugan.
While you were on vacation, we found our motivation. Now we know what we're fighting for. We won't run away, no matter what we're here to stay. There's never been a better time than right now. Everything has changed. Everything has changed. We lack the vision to make our own decision.
The firepower behind
It's time to show them something more. Let's start a revolution. Break from this institution and give them something they can't ignore. We won't run away, no matter what we're here to stay. There's never been a better time than right now. Everything has changed. Everything has changed. Everything has changed.
This technology allows us to cut down on fossil fuels, to make sure we can have a lot of fun in our life, bring lots of productivity to the country and to our families and our barangays and communities without polluting the earth. Yes, it is possible, and this project shows that. Since we started running the power plant the official day and the day of receiving all the blessings. They recommended to increase the subsidized rate by 2 pesos. And I said, no, let's find a system that will bring down the rate. But let's not burden the people. Not only to power Sabang, but to power the entire island of Paleco. Then we can showcase around the world that an island as big as Palawan can be powered with sustainable energy.
So the people of Barangay Kabayugan, please help us to take care of this project. This is for our community, for your day-to-day activities that can generate basketball development in the near future.
Now let's go on to the messages to really increase the honor and the milestone that is the Sabang Renewable Energy Corporation project. And with that, I would really like for us to pay respect to and also congratulate our first speaker, the chairman of the Palawan Electric Cooperative, who really is part of this ecosystem enabling a private sector corporation like Sabang Renewable Energy Corporation to come into its franchise and support its goal and mandate of mission electrification to communities that need the most. So with that, and because they are here to help us also look at other areas where we can really fulfill this fragile mandate and leadership, and his leadership is Mr. Jeffrey Tan Enriga, the chairman of the Palawan Electric Cooperative. Sir Jeffrey.
To ensure that electricity shall be the catalyst of total development towards a green progress. As we are now geared in protecting our environment while producing electricity, in this vision of Paleco is now being realized through the help of DOE, NEA, and of course, SREC. As the saying goes, a goal without plan is just a dream. One of the part of Paleco has now incorporated in its future suppliers that are part of NTP's offer for the supply of electricity will came from renewable energy. That is a hydropower or renewable energy.
I'm so happy that this is the first in the country, and this will be another feather on our cap, another bragging rights that the first ever hybrid renewable energy solar is located in the city of Puerto Princesa in Barangay Kabayugan.
Ito po ay lubos na nagpapasalamat ang mamamayan ng buong Kabayugan dahil po naitalo na yung matagal nang hinihintay ng mamamayan na gustong mapagitan ng liwanag dito sa barangay namin dahil mahabang panahon na wala po talagang ilaw ang barangay Kabayugan. Ngayon po ay nandito na. Maraming salamat po sa pagtutulong dito.
This project also supports the national government's priority of providing electricity services to the remaining unelectrified off-grid islands, remote and last-mile communities to achieve total household electrification by 2022.
Hello, everyone. Welcome to our second webinar, our global webinar on sustainability investments. The question to be asked, what would it take to redirect capital? We've got an exciting and substantial agenda for everyone today, for our global audience who are here from the institutional investment sector, from the public sector, and also from people who are trying to get in as individual investors into this exciting, brave new world of sustainability investments. Now, the 3 points we want to address today, in depth and comprehensive, is number one, what is the rubric? What is the robust and clean definition of sustainability investment? What are the roles, the ranges, and the resources needed to make the sector work? The second question we want to ask is also, what would it take to channel these critical investments into not only emerging markets, but also sectors that need it most in these areas, such as Africa or Asia, in the energy, the water, the infrastructure sectors, into the finance sectors that are critical for a developing economy. The third question we want to answer and tackle in depth is, how can others participate? Not just large institutions, but also crowdfunding, individual investors, small and medium-scale enterprises to participate in what is this brave new world of sustainability investing. And to tackle these, we needed a stellar cast, a stellar panel of speakers and resources from around the world to really manage this agenda properly and really have a discourse properly around this. And with that, I would like to introduce our key panelists for today. We have 3 of them from around the world joining us with us today, and we have a slide that shows that. We would like to first introduce Ms. Frannie Léautier, who's a senior partner at SouthBridge Group and the CEO of SouthBridge Investments. Frannie, welcome to the show.
Thank you very much, Kenton.
And joining us also is Mr. Boris Petersik. He is the director of Tantallon Tech Sustainability Fund, Tantallon Capital, and shareholder also of WEnergy Global. Welcome, Boris.
Good afternoon, good morning, good evening, Tom.
And finally, our firm itself, headed by our CEO, Mr. Atem Ramsundersingh, a founder and CEO of WEnergy Global. Atem, good to have you with us.
Yeah, great, Kenton, to be here in the webinar. Fantastic to see Dr. Frannie Léautier and Boris Petersik on this webinar. Let's make it a good exchange here.
Thank you very much, panelists. As a reintroduction, my name is Kenton Pastrana. I am the president of WeEnergy Power Philippines, the head of business development for WEnergy Global, and your moderator for today. Now, before we begin, and just so we can have a seamless, enjoyable experience, we are going to show basically our house rules for today, so that at least we know what we're going to go through within this critical hour. Number one, is to make sure we have this best experience from today's webinar. Please ensure that you are using a stable internet connection. This is going to be a 1 hour long seminar and a lot of dialogue, critical dialogue in terms of these key issues in sustainable finance. So hopefully you'll have an internet connection that's stable enough to go through the entire webinar. Number two, just a heads up that your mic will be disabled for the whole duration of the webinar, but that doesn't preclude participation, because we are going to have you come in throughout different portions of this event, especially after our initial Q&A. Your questions, therefore, are welcome, and you can raise your hands to share your thoughts and questions in the chat box to the Zoom panel menu below. And in that case, I would like you to, if you're going to ask a question or raise a point, please, when you share your video, identify yourself, the organization you're representing, and present your question. This is such a robust agenda, and a lot of questions are going to be asked, so that if in case we don't get to answer or field any of your questions additionally beyond the hour, please email webinar@WEnergyGlobal.com. Thank you very much, and now we can proceed. Now, the first question really is, what animal is this thing called sustainability investments? What does it constitute? What is the scope? What is the depth? What is their concept, and how is it applied? And to answer that, we have a basic rubric for this Sustainability Investments 101, and that will be tackled first of all by Frannie Léautier, who has a slide for us to show us what the basics of sustainability investing is. What are they, and what are they for?
Well, thank you very much, Kenton. Sustainability usually can be looked at in different dimensions, but the very first one is whether whatever you're doing, a project or a transaction, would actually lead to long-term impact in a society or community or to the environment. And I think this is really critical because the flow of these long-term benefits or impacts are very critical for sustainability. And usually that impacts individuals, regions, and communities. The second key aspect of sustainability is whether what you are investing in can actually be sustained in the long run in terms of repairs, rehabilitation, replacement, and so on. And that's really whether you are creating a long-term revenue base that will be available to repay, whether it's a loan or the initial investment, or to guarantee that revenues will be available for the long term. And you see here, that's where many funds and from institutional investors, from investment banks and banks have decided to use sustainability as a criterion for investment. And then finally, it's whether what you're doing would actually generate a stream of innovations and transformations or in the long term that would be, again, lasting, and that would provide outcomes that would enable you to invest even further into that particular environment or society. And these three areas of sustainability come from pressure from individuals who are learning more about the environment, but they're also coming from communities and companies or organizations learning more about what sustainability is, and therefore making those determinations for their own strategy and operations.
Frannie, thank you very much for really providing that overview. I think it's important to note that this is not just a special kind of investment, it's a very transformative set of investments where you're looking at not only just transforming those who benefit from the investments, but at the end of the day, they have to be sustainable in terms of the revenue base, and more importantly, also follow a specific set of criteria to qualify as such. And therefore, it is special, but it also, at the end of the day, is transformative. Now, I want to move on to Boris. Boris, you know, as a portfolio manager and also longtime analyst, when you look at the markets and their role in sustainability investments, how do you view these sustainability investments and their impact in this emerging new order?
Well, the industry has quite a history of dealing with sustainability. It started in the 70s really with excluding some investments from, you know, the sinful stocks, or excluding some geographic areas such as South Africa. And it's really developed since then, you know, through socially responsible investing into ESG based investing. And the standards of that are being developed as we speak. The funds are already attracting quite a bit of retail, as well as retail attention and retail funds. It's estimated that basically 1/4 of the new money going into mutual funds is actually somewhat ESG motivated. And we're now seeing the industry, the major players, the fund managers, the small funds, which are maybe specialized in ESG, the larger funds trying to restructure themselves and not only kind of greenwash some of their products, but actually to come up with a new approach to reconstruct the investment process to offer very well vetted ESG products. In addition to that, the index companies, and especially the ETF, the passive funds, are also working very hard to come up with better indices that reflect it. And it's really the demand from the retail investor that's pushing that. And it's now becoming a virtuous cycle where the funds that invest in renewables and in sustainable technologies are actually starting to outperform year to date during COVID-19. During the past 6 months, they've been, you know, keeping up with the tech shares. And so it's becoming a virtuous cycle that retail is demanding it, and that the institutions are starting to really reorganize themselves. And we're getting a serious ESG investment opportunity, which are accessible for the individual at very low entry costs. But also accessible for larger institutions to commit major amounts. And I think that development is just starting. And with the momentum over the last 6 months has really picked up some momentum.
Yeah, thank you so much for that, Boris. And one thing to note also with one of your remarks is that, you know, the democratization of investment has actually come to the forefront there. You're looking at the retail investors trying to move the needle for the larger players. And now that the larger players are gaining traction in terms of divesting from, let's say, sin companies or the ones who are pollutive or other criteria that doesn't fit ESG, you're seeing not only funds move towards that sector, but you're seeing the performance improve as well, as you mentioned, in terms of how they're comparatively performing to the other sectors. It's good to see that, and more importantly, good to see that individual investors can now participate in that as well. I want to move on to Atem this time. Atem, I mean, a lot of those funds, you've basically been a sustainability investor, but you're also channeling that to sectors that are needed the most, especially on the energy, the off-grid, the remote sectors that need sustainability investment and inclusive development. Tell us about your views from both a channel and a recipient of those investments.
Well, Kenton, I think the way I look at sustainability investments is about how can our investment, you know, add value to our natural capital, our world, our life, our air, our water, our, you know, our food. How can it add value to those things, and that value can create that positive spiral to improve things further, because we do good here, we do good there, it hits back, and it takes us to the next level, better level, and so on and so on. Therefore, I see sustainability investment, how can our investment help fighting climate change? How can our investment contribute to the social economic development of people? In our business in WEnergy Global, you know, we are very much focused on decentralized, small-scale, decentralized electrification. 900 million people across the planet who have no access to electricity, 800 million people who have no access to water and sanitation. These are huge challenges. Now imagine if we would channel our money into more polluting stuff, destructive investments out there, that wouldn't lead us anywhere, right? So where we need to look into is what Frannie also said, and Boris also said on sustainability investment, is where can we channel our money that creates new value, that makes sense to our planet, our life, our families, our nature, the air we breathe, the water we consume. How that is to me, in the tangible terms, sustainability investment. And it's not sustainability investment like make sure you keep making money, but you keep making money while adding value to our natural capital, the whole thing that we exclude in our accounting systems, or in our bookkeeping, or in our P&Ls.
Thank you, Atem. And for all three panelists, one common thread that runs through your remarks as we kicked off this webinar is really how this virtuous circle starts. At the end of the day, this isn't just a binary thing wherein you can do well but not do good, right? At the end of the day, there is a merit to putting ESG, for example, as a criteria for investments. But not only that, those funds do actually perform. And for example, in the hands of a company like WEnergy, those funds are channeled to critical areas where they actually have sustainable returns, and more importantly, transformative impacts to end users and communities. So it's a fascinating way to kick off this concept, where it's a very holistic approach, but it's also a very merit-based approach where societies are transformed, but investors are also rewarded for really channeling their investments in that particular sector. And to just weave this all together, we do have a video prepared by Frannie Léautier as well that really wraps up this initial concept of sustainability investments before we move on to the next question.
Good morning, I'm Frannie Léautier, and it's a real pleasure to be participating in this WEnergy seminar. And I'm going to be speaking on the subject of sustainability investments. So why should we invest in sustainability? I think the first question is that sustainability delivers impact in the long term. And therefore, if you can measure the sustainable results that come from an investment, and they can be shown year after year, that is a good measure that those results are durable and therefore sustainable. The second dimension is that the investment that you're making creates no negative and only positive impacts around the environment in which you are investing, whether it's on the social impacts around people or the environmental impacts. So if those impacts provide a positive chain of results and do not harm or provide negative impact, then those investments are sustainable. And then finally, sustainability can be measured from the point of view of finance, the ability to refurbish, to rehabilitate, and to maintain infrastructures and other investments over the long term. And that ability is also sustainable. And therefore you have sustainability from an impact point of view, sustainability from results and the surroundings around the environment, ecosystem, and society, and then sustainability from a finance point of view. So how do you attract investors to come into a sector such that they deliver sustainability, or sustainability financing, as is the topic that we're discussing today? I think the first is to demonstrate to investors that when you invest in projects and transactions that have been thought through from a sustainability point of view, that those are actually better projects. Those are projects that would have a better return because you have thought through the risk environment in which you're investing, and that gives you therefore a more bankable project. Secondly, financiers can be attracted to sustainability investing when you can show that this is the wave of the future, that the majority of society is asking for sustainability, and therefore you have a chance to invest in a transaction or a project that will be liked into the long term, and therefore provide you with security in terms of knowing that there will be demand for that service or product or that project or transaction. And then thirdly, it is the question of innovation. Many of the investments that go to deliver sustainability have highly innovative technologies, ways of management, or ways of delivering the services. And therefore, as a financier, you're riding the wave of innovation, if it's in technology or these other areas, and that gives you security for the long term. So what has been done in other regions of the world, if we look particularly at Asia, and what is the relevance of those opportunities in the case of Africa, and what examples does Africa itself have to offer in the way of sustainability? What I found very impressive in Asia has been the whole movement and investment around microgrids. Microgrids have been able to deliver services to the remote poor, to rural areas, and even to excluded urban groups. And then through those microgrids, when the smart metering and other technologies advance, they can be quite easily connected to main grids and therefore give you alternative solutions for renewable energy, for example, which would then deliver sustainable energy for larger and larger communities. And I think these examples could be of great value in the case of Africa as well. Within Africa, I've been very impressed with the project on Lake Victoria that uses wind energy and delivers through a microgrid energy solutions to households, but also to the fishermen and fisherwomen in the area who can preserve their fish. And you've seen recently that that kind of preservation of fish allows you to export not only to neighboring countries, but also to outside countries. There's a recent project that was signed between Tanzania and Rwanda through Rwandair that carries fish from Lake Victoria and exports it to Europe. And this allows people in Europe to have fresh fish coming from the lake in Tanzania. So these are examples where thinking through sustainability in a different way can deliver investments that are not only long-lasting, but that are actually valuable to the community and that are sustainable in the long run because they deliver a chain of revenues that can sustain those projects going forward. So these are some examples that give you the sustainability definition in terms of impact, sustainability in terms of the chain of results, and sustainability in terms of long-term financeability and particularly around maintenance and rehabilitation that come from those kind of investments. It's been a pleasure talking to you, and I look very much forward to the WEnergy seminar that we're going to have in a few days.
Okay, and with that pre-recorded set of messages, really provides the overview in terms of how multidimensional sustainability investments truly are. And this is actually a good segue into our second question, wherein we're going to look at specific case studies, but also where the rubber meets the road and where investments do start migrating and channeling towards these sustainability focused areas. So for the second question, I will ask the panelists, and to situate this in this environment. This is the post-pandemic or a prolonged pandemic environment where disruption is the norm, vulnerability, volatility, uncertainty, complexity, and ambiguity. That is the VUCA environment we're in. And in this case, how do you now, even with the momentum of people moving there into that gradually, how do you now persuade institutional investors to prioritize a sustainability framework when it comes to planning and executing these investments? And if you could, similar to what Frannie had mentioned earlier, what kind of case studies are you seeing that show that there is an actual interest and a robust channeling of these investments because of that? Frannie, I guess you can start again in terms of building on the investments and examples that you showed.
Thank you very much, Kent. I think what has happened with the COVID-19 lockdown and social distancing is to put an even higher sensitivity around why sustainability is so important. So we've been working from home, which means each of us in our own households or in our own communities need energy. And so if you had not distributed energy to communities and to the remote areas where people live, the working at home experience would be quite negative. And we see this with a number of companies or individuals, even where I work, where an unstable electricity supply means they cannot participate on that particular day. And this has impacted particularly small and medium enterprises. Therefore, it is very critical in the post-COVID environment to take those lessons learned and to embed them into sustainability. So the first thing really is around how do we generate energy that is usable in more distributed areas, in more decentralized areas, but without completely destroying our environment, because energy contributes tremendously towards carbon dioxide and other emissions, and therefore rethinking the model and delivering energy closer to where it's being used becomes a very good solution. And then the trade-offs between putting energy in a decentralized fashion versus using transition energy, say like natural gas that can then be transitioned into hydrogen gas, become very critical so that you can build a pathway towards sustainability. And when you do it properly, then you get this stream of revenues that users would pay either from fees or from grants or other mechanisms to finance those projects. And the second, which is equally important, is that many times when you look at impact, especially when you look at impact surrounding a project, the long-term ability to manage risks within that investment is very critical. So let's take the example of floods, which have happened now in multiple seasons and multiple ranges of impact within Africa, for instance. You take Mozambique, Zimbabwe, Zambia, and even Tanzania and Kenya that have been impacted tremendously by flooding over the last 3-4 years. And infrastructure that was built around those coastal areas, or even basic city infrastructure like storm drainage, for instance, was not sufficient to deal with the risks of those floods. So as sea levels rise, cities have to start thinking more creatively about how they will handle those knock-on risks that are not intended or that were not planned for, but that will become even more important going forward. And of course, when the floods come, they wipe out the the energy lines, because these are still on the poles and wires that are going from one region to the other, and those get destroyed during these floods. We have to think through a different way of delivering the services. And I think I will stop here because it would be very interesting to hear what colleagues on the panel are thinking about this, so that we can have some kind of a dialogue amongst each other. Thank you.
Yeah, thank you very much, Frannie. Boris, it's interesting when you look at the sector you represent as a portfolio fund manager and an analyst, the listed equity markets. These are basically, the big guns really in terms of handling trillions, dozens of trillions of dollars in investments. I mean, could you tell us about case studies on how the traction is moving towards ESG and sustainability investments, and how you've seen the impact change over the years, especially for those recipients of those funds?
Yeah. I'm taking probably a slightly different angle to Atem, because basically when we talk about the listed markets, we talk about greed and fear. Greed is the opportunity to make money. Fear is, risk and missing the wrong risks. And I think COVID has highlighted a few things. I'll get into those, but just on this greed and fear, renewable energy, sustainability stocks have moved onto the side which is seen as an opportunity. Whereas before we were worried about the costs of extra investments that would be a drag on growth, we're now actually seeing cheaper energy coming out of renewable energy, which is an opportunity to grow faster, an opportunity to reduce costs. So sustainability has kind of moved from a burden to an opportunity. And the risk, conversely, has moved to things that can't keep up with sustainability, i.e. certain sectors, such as the whole fossil fuel sector, which has serious issues and needs to very much review its way of operating, both because it's no longer seen as attractive to the fund management industry because the growth has come into question, and the additional costs of having to cope with the CO2 issues, and the additional challenge of much cheaper energy in the case of coal from renewable energy. So we've seen a big shift where sustainability actually goes onto the growth side, and some of the traditional, let's say, cash flow generating industries that were also very well represented politically are being driven on the defensive. And related to COVID, I'd like to point out, the tech giants, of course, have hugely benefited from the traffic. We've all been at home. We're all online with Zoom and other applications, media flows. And so when we look at the RE100, the companies that have pledged to go renewable, using renewable energy, 100% of all the demand, it features a lot of tech companies. These tech companies are actually being challenged right now to generate enough green energy, to buy enough renewable energy to meet their targets. There's a shortage of renewable energy out there for them to operate in the various markets, and it's a rush to actually generate clean energy. And again, it really puts the onus now on the industry to develop more renewable energy sources, i.e. push the volume on wind, push the volume on solar. This again is a guaranteed growth driver for equity investors who want to be there. So again, it highlights how the current crises, having driven volumes for these guys, is actually a crisis for them that's growth for everybody in renewable energy. And if you're an Apple or an Amazon right now and you want to buy energy at a fixed cost for the next 20 years, a fossil fuel company cannot develop this or cannot deliver this. This is purely a renewable company that's put the assets in place, that knows how to run them, how to service them, can guarantee these prices. And that's where the demand right now is. So again, it's actually a very big reinforcement of some positive dynamics coming from renewable energy, and it's a big headache, and it moves the money one way or another. So it's fear and greed, especially for the individual investors, on Robinhood, who are also busy at home trading, but it actually delivers for us on the sustainability side.
Yes. Thanks, Boris. I mean, it's a nice heady combination between enlightened self-interest on the investor side, but also that, it really enlivens the business models right now that renewable energy companies can provide, especially on these long-term runways, wherein companies like the big tech need sustainable and flat rates over the next time for predictability and competitiveness. Atem, you know, I've had the pleasure of being with you on a roadshow when you had individual crowdfunders, but at the same time meeting with large conglomerates in terms of seeking those funds and securing those funds. Talk to us about that experience in terms of winning them over, and what is a trend in terms of bringing those investments sustainably for good?
Well, you know, yes, we indeed, a few years back, intensively worked with crowdfunders from the Netherlands. We were in touch with crowdfunders from Austria and Germany. And yes, that is fascinating. It's not bringing the big money, but the nature of our business and the nature of what Frannie spoke about is decentralized. Decentralized by default is actually small. A village level, a township level, even an industrial estate level is relatively small if you talk at a national scale. So the nature of our interventions or support to economic development and to sustainability by using clean energy and encouraging and inspiring people to move towards cleaner production, whether it's cleaner fish production, cleaner food production, that is what we do, decentralized. That's small. When it comes to, you know, when you bundle those small little decentralized systems out there, it becomes big. It becomes big when it's bundled. Now, this is where I think the creativity needs to come in, and we try to practice that a bit by looking into, at a small scale, at a decentralized level, looking into how could we collaborate between with crowdfunders out there, right? Forget the rules, forget the regulatory rules out there. There are no rules there. Human beings are tired from putting their money on the savings accounts where they need to pay the bank, who then pays bonuses to their staff. That's not sustainability. So people feel it, that they have to take another risk, not greed driven, but a risk, not fear driven, but a risk they have to take with their savings to do something good while being at home, while they make a deliberate choice that they don't want their money and the fees they pay to the bank to flow to people who are not assuring that sustainability direction and who are not supporting climate change out there. Yes, there are a lot of banks out there, Singapore banks, international Dutch banks, who are not putting their money in sustainability. If I want to invest, buy a product inside the bank that is sustainable, that's green, I can't. UOB Bank, DBS Bank, they don't have a product that where I can put my money and make a few percentage of interest or whatever, or a yield. They don't have it. They don't have a green bond. They don't have it. So these crowdfunders would come in, look at your ideas, get somebody to do a due diligence on you, where your investment is secured, and put the money in. There could be thousands of people out there who buy bonds out there, and unsecured bonds, who take that risk, but not out of greed, not out of fear, but out of solidarity, out of sympathy, out of understanding our interconnectedness, how we relate. My small piece of money can make something big happen, right? Can electrify communities, can create jobs for women, can make sure that the kids can go to school, make sure that the SMEs out there can sell more fish or sell more food, or the restaurant or the hotel or the backpack place where tourists go can survive. So I think that is something that, to me, is at the level of crowdfunding, right? And then you have the big guns out there, the investment companies, the Goldmans, the world Boris is talking about, and so on and so on. How do you convince those people? You find in that conversation, and I think Boris and I spend a lot of hours talking to those people out there, including not only banks or investment banks but especially also companies such as, you know, grid operators in Netherlands, or grid operators like TEPCO, our partner right now from Japan, TEPCO Power Grid. When you manage to convince the leadership, because the leadership of these companies are looking for what we are talking about, they can't find it, they are too big to to sit in that high tower, looking down and understanding what's happening on the ground. So they need companies like us to show them the way. They need a technology partner. They need a partner who knows the dynamics on the ground between governments, stakeholders, you know, all the other uncertain things. Also, these people are not greed-driven. If talk about my TEPCO, Tokyo Electric Power Corporation, Power Grid, if you talk to the president and the board of directors, these people are sincerely converged to make a change in the world. They also started to understand that if they don't do it, who else will be supporting companies like us who have a dedicated mission to make change on the ground. So they want to be part of it. And I admire that in the conversations, what evolves is not only a capital investment, but what you see is also a model for development that emerge from these conversations with these big guns out there. For example, one of the things we are developing right now, while the capital is secured and capital is not our headache and technology is not our headache, governments do, but I'll come later on that. What you see is that with working with this type of partners, of course, what Frannie said about revenues, you got to be able to pay back your loan, you got to have that discipline. That is the financing and the financial part of the game. The other part of the game, what this type of investors wants to see, is that you're not only building a microgrid and then provide electricity and then your mission is over. They want to go to the second layer of bring development, advise people, promote the use of electric vehicles, promote the use of electric fishing boat, promote the use of electric crushing machines for food production. Bring that, finance that, provide lease options. You know, this is where I think the added value goes. And then the third level where we are talking about in our relationship with our investors out there is a third layer. I mean, the second layer is an example that Quentin, you and I and our teams are pushing, is to start a vegetable company to plant vegetables under our solar panels in the Philippines and sell that. And then take part of the profits and do something good back, not charity, but something that adds value to the planet. I don't believe in charity, just like charity and so on, but do things that really helps us to add value on this planet. And I think that is an example of what the kind of big and the small investors who are working with us would like to see. And I think that is a fantastic, inspiring strategy to attract even more money, because what we are having now is that the small guns and the big guns, all of them are approaching us to say, hey, can we collaborate with you guys and invest, and not only invest, but can my staff participate in your project teams? Can they go to the site? Can they meet with those people we are talking about? So it's not a spreadsheet thing. It is not a video, a Zoom thing anymore. It's a real thing now to go down there and make that change on the ground.
Thank you very much, Atem. And certainly it's so nice to see this ecosystem of investment coming in from the big and small players with different incentives and different dynamics, but it certainly makes for a robust marketplace that allows you to find more funds for the endeavors that a company like WEnergy is doing, for example. Now, before we move on to a more in-depth discussion on the equity markets part with Boris, I wanted to interject now some audience participation, because we do have these polls. We've innovated these polls for these webinars in terms of trying to get a pulse on where you feel as this discussion is going and where you feel it should be going. So we have a first poll question right here. Can you broadcast that first? This is an interactive poll. You can vote as it is. So yes, given this ecosystem and set of stakeholders, who do you think has more influence in sustainability investments? I'll give you 10 seconds to look at this, and then we'll get the results. At least we get a feel of the market from for the dozens of participants we have today. Talk about dynamics. it's moving and evolving as we speak. So great. So if you look at it this way, I mean, this trend line is moving towards a bit of a margin on the governments. I suppose people are thinking about the regulatory aspects of maybe sovereign wealth funds. We'll talk about that later after having an in-depth with Boris. But if you think about this current poll right now, people are equally divided in terms of which ones have an opportunity to move the needle. governed by way of perhaps regulations and maybe their own sovereign wealth funds, such as with the Middle East states that are trying to diversify. Certainly banks, as we look at these funds that are moving in terms of ESG. And then wealth funds, that's something also that's a subset of governments as well. And interesting to see that we have individual investors coming into the fray as an opinion from our crowd, that individual investors, as Atem alluded to, are actually gaining more empowerment in terms of moving the needle for the sector. So thank you for that. We have one more question as well before we move on. Okay, so we've got the results there. So we've got the hierarchy of where we feel the influence is coming from. Second poll question, so we get that out with. Do you think the individual investor, because of technology and crowdfunding platforms, will have more impact than banks and governments on sustainability investments? Maybe not now, but this emerging future that we have. Nice to see a dynamic poll also coming in together. So it looks like we do have a clear trend here in terms of where that answer is going. It's pretty binary, but possibly 80-20. But yeah, so if we cut it off at this cake, it really shows the optimism of the crowd itself. I think your remarks are well taken, that there's a way to democratize funds and access, and here we have it, 79-21, at least from our pool of audience participants, that we really feel that there is a good role and room for individual investors. And it does remind me, before I move on to the next topic, it does remind me of what the old business school reading showed, John Naisbitt on the global paradox, that the more globalized the world becomes, the more powerful the individual players or the smaller players are. So I think that is reflecting on that optimism as well. So with those two questions, and it's been percolating in the minds of our audience, let's move on to our next section. And before we get to the role of the public sector, the private sector has so many sectors and subsectors that I really want to zero in, Boris, on your treatise on how the dynamics of the market is evolving. I mean, you've given us a framework in terms of looking at ESG, and at the same time those incentives of greed and fear and how it's really spurred responsible investing. But talk to us about the dynamics of the current market in terms of how that's evolving in terms of sustainability investments.
I think, well, there's two things I could probably point out. One is a little company called Tesla, which has really captured people's imagination. Now, while Elon Musk is a very interesting guy who combines this amazing engineering and vision, and engineering execution vision, I can see how he's very attractive in terms of somebody one wants to be with in terms of investments. But the company's basically gone to be a $300 billion market cap, which is larger than any auto company ever was, even at the peak of the markets. And I think, he has a vision. People are not necessarily rushing out to buy electric vehicles, but they have a vague understanding that electric vehicles are probably better for the environment. Now, there's a big caveat, you'd want to have electricity from renewable energy, not just, burning more fossil fuels to generate the electricity to run your Tesla. But, I think there's a trust in the guy and the trust in that business that it's going to deliver better solutions for a lot of us. And that it may even be a catalyst for changing the whole auto industry and for all the mainstream companies to have to follow him. And so that we could actually in the next 20, 30 years go, very much towards electric cars. And even in 5 years' time, you would ask, why are you still buying a diesel or a gasoline car? And so, it's very difficult to combine the 300 billion market cap for a company that's barely profitable. But it's really, he gets the imagination going, he gets the story going, and he's attracted the type of capital that is crazy. I mean, the guy has become instantly the fourth richest man, but he's offered a vision and he's offered a product, and the company is listed, and people want to be with it. So there isn't that much, good sense to the valuation, but there's a lot of positive energy that comes out by people wanting to invest with them. And so that puts pressure on, all the mutual fund companies, all the other companies that are in the industry investing to be invested. So it's the individuals, again, who want to be there, who drive up the price. They make decisions to go with funds. They're asking all their fund managers now, why aren't you owning Tesla? And they don't want any waffling and saying, well, it's kind of expensive. And, or, the only thing you can say, well, I invest in another stock, another EV company or a battery company, or I prefer renewable energy, I'm in solar. So again, it's stories like this, which are headlines in all the major papers, which show success, strategy, vision, growth, the whole thing. And I think, we're generating more and more of those from the sustainability side, and not necessarily just the focus parts, but some of the more broader changes at some of the more general companies. And it's that brings excitement in. And, in the end of the day, people do want some returns, but they also want some excitement. And that's what these companies are currently offering. And so it's the new Amazon, it's the new Google, it's the new Microsoft.
Yeah, certainly. I mean, when you look at the narrative, that investor narrative that he spins so well, I mean, that is caught on despite all the naysayers. So it's interesting to see what stock price is now and how he's been able to troll all the analysts who've actually written him off over the last few years, and see that he's still continuing the drive for innovation, moving on to space beyond electric cars, and you're seeing a lot of companies trying to move that needle and push the boundaries forward. So thanks for that, Boris. One thing to notice also is now we move on to the other side of things, which is the role of the public sector. Now, when you talk about the public sector, you're not just talking about one monolith of government in terms of regulations and policies. You're also looking at some governments that do have sovereign wealth funds that are driven by also returns, but also certain political interests. So that's the next question we have today, which is, what is the role of governments from both policy side and the sovereign wealth investment side, and even central banks, to enable a sustainability-driven investment regime? So with that, I mean, I will go back to Frannie, who has a slide prepared for us today to really take us through, that complex answer.
So Kenton, on your question on the role of governments, I think the first role clearly is creating the environment in which solutions can emerge. And I take the example of mobile payment systems and the pay-as-you-go systems or plug-and-play systems. All these systems that allow individuals to pay in time or to pay when they need the infrastructure, whether it's electricity or telecoms or other services, could only happen because governments created the opportunity space for those markets to grow. You open up and compete out the bandwidth that allows multiple companies to come in, and then those companies innovate and provide opportunities that then consumers and users come in and consume and innovate during consumption as well. The other area which is also very critical is when you look at distributed or decentralized services like micro generation or micro level generation of services. These also provide affordability. So when governments come and put in strategies that say we want to impact the lower segment of society or those who are currently excluded, whether it's small towns, rural areas, low income residents and so on, that kind of pushes solutions to the individual level. And once you can innovate at that level and deliver a service, whether it's in a remote area or a village, it's very easy then to go up the chain and deliver that same service to a larger community. And then finally is this ability to combine systems. If you look at smart grids or solar energy or mini hydro and even mini wind turbines, those are technological innovations that allow distributed and decentralized provision. But if you then have government regulation that comes in and allows those systems to interconnect to the grid, for example, then you can extend your energy provision at a much better footprint vis-a-vis the ecosystem than otherwise. I have a small example of a park, an untouched natural park in Tanzania called Serengeti, where the animals are still living the way they did for centuries. And the question then is, how do you provide energy to all the surrounding communities that about the park, the industries that are around there? Some of those industries are required even to power the green energy generation, because they have the kind of minerals and metals that are needed to put into batteries and some of these electrified transportation vehicles and our communications in terms of the internet and other mobile services that we use at home. So the solution usually comes as a combination of having smart and microgrids with mini or decentralized distribution of energy production, for example, but with the ability to link up to bigger systems. So the role of the government in creating the market space and setting the rules of the game, having policy and strategy to meet excluded groups, which pushes for innovation and opportunity to serve at different levels of delivery. And of course, the very important regulatory aspects that allow those competing technologies to participate in a global space and in a regional space that can link up to existing systems and help transformation from that small level going upwards. Like mobile payment, if we didn't have mobile payment systems today, people couldn't function in many parts of Africa, because people now have their telephones, they pay directly from the telephones, they're able to do banking through their telephones, and it has completely removed the need for other types of payments. And those kind of innovations now have spread out all over the world and are being used at very high rates.
Yeah, thank you very much, Frannie. And we're talking about here, whether it be telecoms or water or energy, as you focus on with microgrids, these are last mile delivery solutions that really empower these communities and help them contribute to the global economy. And on that note, let me move to Atem first and talk about, Atem, I mean, a lot of these, the sector, this microgrid sector is very, to yours and my experience, is very intensive in terms of government regulations. How can governments actually pave the way for more of these critical investments at the quicker possible time and to make them more sustainable?
Quentin, we are in the midst of preparing a bunch of political letters to political leaders. Governments, to me, have become almost everywhere, especially when it comes to, creating space for access to electricity, access to water sanitation. Government seems to be popping up as, those creating obstacles rather than those, like Frannie tried to express the desire that governments to pave the way for new technologies, for new systems, for new things aiming at that sustainability, aiming at social economic development, aiming at these sustainable development goals. It is not happening. There are individuals out there, senators, ministers, senior policymakers in governments who are sort of very willing, very supportive, passionate, and really want to help you to remove those obstacles. But it is not happening. Now, you would wonder why. There's a variety of answers out there, but it is one of the biggest obstacles right now. Now, it is not only a simple answer like, okay, we need some more time because it's a new technology. We are combining different sources. It's complex. We don't have rules, regulations for it. Give us 7 years. Well, no, you can't. It's a sin to ask for 7 years for us to build one microgrid. It is a sin. Those people need to go into prison out there at some day when they leave government or when they are removed from government. But the obstacles are there. Now, let me give you a positive example. We are engaged, we in the team, we are involved with helping a Senate out there to craft a new bill for microgrids and the engagement of private sector. That's a team of people in the National Committee of the Philippines to really look into how can you remove those obstacles and how can you bring in private sector technology and capital and deploy for a sustainability objective. Now that is a good example. If you look into countries like Myanmar, right, just coming out of a young democracy, getting out of from a fragile state to a more normal sort of performing country right now, you see how the World Bank and the governments are collaborating to create mechanisms to engage private sector in the electrification of 40 million people out there. Now, these are the good examples that I feel that government should take and embrace the dialogue with the private sector to enhance and accelerate. It is ridiculous to receive a proposal in Manila and sit on it for 5 months or 2 years or 8 months. It's a shame. I hope, apparently the frustration on my side is that COVID has not opened their eyes. And they are not dead, right? So COVID is not opening the eyes. Everybody talks about we need to help each other, we need to be, but it's not happening. So I think the biggest barrier is obstacles. Now, those obstacles shouldn't create more fear in investors, not in big investors and not in small investors. That is something we need to really use all the political stakeholders out there to remove those obstacles out there so that investors from uncle and auntie and mom and dad who want to buy a small bond, but also the kind of audiences that Boris, for example, works with in a respectable way, that those people get an assurance from governments that when they plug their money for a sustainability objective and a sustainability project, that they are being protected. And these are not sharky business people or sharky people who want to destroy and hijack a country. It really needs to stop there. And I'm really inviting the audience in this webinar to think with us how to create that dialogue, but a fast dialogue, a dialogue that leads to action now, not 5 years down the road. Those people living in darkness can't wait for 5 years.
Thanks, Atem. And it truly is a clarion call, especially for a developer that is relying on capital to invest this in a sustainable manner, that these investments are channeled properly, they are used to build projects, and they are used to generate returns for these investments, and more importantly, to help transform the communities. Any delay, as you mentioned, is quite perversely criminal, to use another word. But having said that, I mean, you're really looking at this is where the rubber meets the road. Development can only happen when there's a level playing field, especially when you want to do last mile delivery solutions that involve a lot of infrastructure and capital, however big or however small. Now, having said that, thanks for that, Atem and Frannie. Now back to Boris. Boris, when you look at the investors in terms of what you see as deterrents to sustainability investing, you know, whether it be in a particular stock market, whether you're a sovereign wealth fund or, you know, a private equity fund, tell us about the kind of deterrents you'd like to see overcome so that more sustainability investments can flow into these emerging markets.
Well, I think you know, there are different parts of the sustainability sector. I mean, we've addressed a lot of them, and again, I go more to the mass markets. But when you, for example, see, you know, how solar was really quite volatile for the past 20 years, more people have lost more money in solar investments, i.e. in solar stocks, than they've probably made money. I mean, there've been spectacular busts. And so it's really when these sectors try to go mainstream, it takes a long time. And it really was initially the Japanese government support, then the German government support, which created these temporary booms on the back of guaranteed rates that were, you know, quite extraordinary and not very economical. And it's really explaining that you know, those periods don't last, and it takes time for technologies to go mainstream. So I guess, you know, it's always going to be buyer beware with these initial boomlets. I mean, this is what emerging markets are in terms of equities all about, and we're seeing just the same thing again now. Referring back to, you know, government policy, the Europeans in their Green Deal, which they used to get going after COVID, have gone out and really backed hydrogen. Green hydrogen. Now, green hydrogen hydrogen has been an industry in the baby steps in developing for the past 20 years, it's something that, you know, making hydrogen out of fossil fuels is possible. Making it out of water is possible, but both are very expensive, and the one from fossil fuel is quite polluting as well. So you know, to push hydrogen now, to put lots of money into to actually develop the conversion from water into hydrogen it's way early, because it will only make sense once it's green, and we need enough excess wind and solar to deliver that green energy, which is going to be in 10, 15 years time. So you know, you've got the government making this an opportunity. You've got a lot of investors jumping on this thing because it looks like it's going to get going. Clearly, it's an emerging technology, an emerging market. It'll be very exciting. It's something that will make lots of growth maybe in 15, 20 years. And there'll be great booms and busts until then. So you know, I guess it's very difficult to protect people from the busts. It's extremely difficult to keep them away from the booms because everybody wants to participate. But these are the kind of animal spirits that you kind of, you know, you want to get going as a government. And then, you know, 10, 15 years later, you have a real industry. Mm-hmm. Now, the challenge this time around for the Europeans will be, you want an industry in Europe in the next 20 years and not in China. So, you know, geopolitics are changing, and people are aware of this. So it'll be an interesting ride in hydrogen for the next 20 years. I hope that addressed it. I mean, you know, it's a bit off the topic.
No, Boris, it's interesting to see those dynamics, especially when it comes to, you know, having to transition with all these disruptions, and more importantly, having the sense to see 15 years what conceptually could work, and provide the kind of incentives so that innovation can actually be made into a monetizing, real business model that people can earn from, and also, you know, change societies from, in terms of inclusivity and sustainability. So I think your points are well taken. Now, when let's just move. We've spoken a lot about crowdfunding, and especially Atem speaking about it a lot. So I'm going to move towards one more question before we open it up to the audience, which is, you know, these new platforms. You know, everybody was either enamored or then burned by these new platforms such as blockchain, cryptocurrencies, and other fintech innovations that are still coming out, notwithstanding the crisis, or even being driven by the crisis. How do you make sure that these innovations really come to the fore and become really tools for democratized access for investments? How does that innovation get managed so that the risks are minimized, but at the same time, options using technology can be really propagated so more people can invest as individuals and institutions? We'll start, I guess, with, we'll start with, you know, Atem, you want to go ahead because you were talking about the crowdfunding thing.
Boris, maybe Boris can.
Boris is a good time. Yeah, I guess you can do a continuity from your answer, and then we can go to Frannie and then Atem.
Yeah, I mean, it's very difficult to be specific here, but you know, I probably believe more in letting, you know, the flowers bloom, and then come in where, you know, regulatory oversight is needed when there is actually momentum on the ground. I think the Europeans in general try to kind of, you know, preempt everything and don't get the energy going. But in the US usually, as well as in China, clearly people run way before, you know, the stuff is proven. And eventually it becomes a new platform. You know, in terms of raising money for sustainability, I think that is the case with crowdfinancing. It's you know, cryptocurrencies are a different thing. I mean, I think they'll get regulated at some point, and it doesn't really apply that directly to renewable energy. Renewable energy is a very legal, very transparent business. I think current currencies work quite well. But I think, you know, in a way, I had to be convinced by Atem about the crowdfunding, you know, and as, you know, some credible players and some light touch regulation has appeared, it seems to be a viable way of getting, you know, micro investments to smaller projects, and you know, as long as that financing flows and those companies that receive the financing deliver, you know, for the most part, and the platforms take a very small haircut, you know, that ideally is a lot smaller than what investment banks or larger banks take, it's very viable. But, you know, there will be blow-ups, there will be regulations, and ideally, you know, but we need to test this out And you need to be fairly flexible and aware that we'll make mistakes that then get improved upon.
Yeah, thanks, Boris. I mean, and then really, I think the key word there is light touch, and not to stifle innovation, but also you put it in these safeguards as well. And I know, for example, central banks like in the Philippines are doing this sandbox approach where people are trying to iterate, experiment with the players to make sure that they have the right combination before they release the market. So I think that kind of light touch public-private partnership might help for central banks as well. Frannie, I mean, you were talking about mobile payments and other innovations. Talk to us more about how to democratize these tools more, especially for last mile delivery solutions.
Yeah, in fact, I'm going to pick up on what Boris was saying about hydrogen to give an example. It's a real example in Africa of how using these types of fintech innovations, crowdfunding and last mile solutions, you can actually transform the entire sector. So there is a company in Africa called African Clean Energy that makes cooking stoves that go from biomass to hydrogen. And therefore you can use them for indoor cooking with lower pollution, indoor air pollution, which is one of the major killers. And now with COVID-19, having indoor air pollution is a much bigger risk for individuals in that household than other risks that they may be carrying. So this company manufactures those stoves. You need just pieces of wood, small twigs that you put in as your biomass, and you burn that to create a hydrogen-based cooking solution. So that means that the hydrogen revolution is now beginning actually at the household level. And the households are then able to pay for this stove, which costs about $100 by having prepaid or fintech-based solutions or payment platforms that allow them to pay over time. So it makes it affordable. So here's an example of how you can combine fintech with last mile solutions going to the individual household to get a clean cooking energy that is hydrogen based. And when you talk to the technologists now in this sector, the same technology can be done on a large scale using, for instance, the transmission networks that are now running natural gas, and with tweaking, which doesn't cost a whole lot, you can transform those networks to carry hydrogen instead of natural gas. So as the costs come down going into the future, you can bring down those costs of delivery of a cleaner energy. So this is an example where from the top and from the bottom, using fintech, crowdfunding and other solutions, last mile solutions, you can get the sector moving in the right direction. And I think there are many other examples. This is how telecommunications, for instance, advanced, because you gave prepaid solutions where people can afford the telephone, but they cannot afford the service. So you give them a payment plan where they can prepay for a number of hours of usage, and over time, the using of that technology advances, and before you know it, you're using it for your banking, for your learning, and for your sending products to markets through e-commerce platforms. So I think that the key thing is to support the innovation so that these type of bottom-up solutions or bottom of the pyramid solutions and last mile solutions can also drive the innovation space and provide opportunities for large-scale investments to flow. And I think this example probably is a very good way to link all of these three pieces together.
Yeah, thank you so much, Frannie. And then to just dovetail your response to Boris, if you have the combination of allowing innovation and then having these fintech solutions take small haircuts or small friction points so that you can get capital flow in and make it profitable to and incentivize to do these innovations at the bottom of the pyramid, then I think you really have a solution, a great set of ingredients for success. Now, Atem, I see that these microgrids and also the company's innovations at the ground level are starting to emerge. Talk to us about where you see these innovations going on in terms of how to get capital to those related industries, not just energy, to make sure that inclusive development happens in those remote areas.
Well, where we have been working and real experience life and really leading to results was collaborating with crowdfunder Lend-A-Hand in the Netherlands. Very successful campaigns, over 1,000 investors. Now for the last almost 3 years, we have been on time, paying back the yields and the principals to them. And people are pretty much following us on our website, on our Facebook, our LinkedIn, and see the results. And some people even were planning to visit the sites and see the things by themselves because it's a tangible investment they made out there. COVID destroyed it for now, but I'm pretty sure those people will start planning their next holidays there for next year and go to those sites and see, because they are in beautiful villages and beautiful places, and they get an opportunity to meet with the local people who are benefiting from them and not just watch a video. So I think that is the nature of decentralized and small. You see, these things are not conflicting. We've been working together with a team from US, from the Tuck Business School last year on blockchain, use of blockchain, and how we could not only raise money and give people access to information. Is one of the questions I think one of the attendees is asking, Ms. Lade,
Araba, yes.
Araba. She's asking that question: how much can you give insight to investors into your financials and into your investment portfolio out there? Yes, it can be done, because what we do with the blockchain research that we did, looking into how we could use blockchain to raise money from all over the world with high net worth individuals, but also small, meaningful citizens of this planet, how to bring their capital into something that they can keep monitoring from their cell phone. They can see how much electricity is being produced. They can see how much employment is generated. They can see how many new ATM machines were installed in the village. They can see what is happening in real time. They get the right to brag in a bloody bar when they drink, in showing people their pride that what their money is doing and how much they're going to get back and when. I think when you manage to do that, right, and of course, for the side of the developers like us, it requires an iron discipline out there. You can't go down there, take other people's money and mess around under the name of sustainability. You got to pass that integrity test. You got to make sure that, those people like lend a hand who do their due diligence on you, that they don't just push money like other banks, but they use money to provide to the right people, the right leadership out there. So for me, blockchain, these cryptocurrencies are the way to the future. Now, to finance those small, little decentralized investments out there in Africa or in Southeast Asia, where we are very much busy right now. And then at some point, this is the discussion we are having, at some point, you bundle that basket of small, little cute projects that were financed by the crowds, financed in a democratized way, financed by using technology, bundle it, and then you could negotiate with the big banks to look for big size and that kind of ridiculous arguments in my view, right? They look at those things, and then you refinance things. You could look into how could you cut down your cost of capital going forward. So bundle it. So those two worlds are not necessarily contradictory or exclusive. So this is the way we look at crowdfunding. This is the way we look at blockchain, and we will use it going forward. But because you will, it's not only about money here. It's about engagement. It's about solidarity building. It's about connectivity of world citizens. We are world citizens. So by connecting the mom somewhere in the township of the Netherlands or Austria or in Singapore or in South Africa, you are creating that global solidarity out there that people feel engaged. Now, if I go to the mayor of a town and I say 1,000 people or 5,000 people are watching you, or they are going to be your customer to come and visit your township as a tourist and spend their money, the mayor talks different language out there. So to me, crowdfunding and blockchain is not only about money. Yes, it is driven by sustainability, it's driven by people who live in darkness, who want to provide productivity, power, and water and sanitation. Now, going back out there, those people want to do something good. They get insight through their blockchain mechanism to see what's going on and pledge and decide to pledge more money or not. And then later on, you bundle those small little projects in one big basket and refinance to make things more efficient towards the next cycle and the next cycle. I look at it from that perspective. Over to you.
Yeah, thank you very much. And then, like I said, at the end of the day, I mean, what was impossible decades ago and maybe even years ago, the C2C financing, I'm not talking about customer, citizen to citizen through crowdfunding and through these fintech tools are going to be such an exciting subsector to watch out for. And not only that, as you mentioned, you can bundle that and then even make it attractive for the larger investors. So thank you very much. This is, at this point, we are going to open it up now to our audience who have piled on a few questions. But before that, there is a poll that we want to have just in terms of the substance of this discussion. And we have our second to the last poll question. Can you raise it right now, please? Okay, so that question is, do you think new emerging untested platforms and instruments such as blockchain, cryptocurrency, and other fintech innovations will be able to create more inclusive, sustainable impact in light of their potential risk and disruptiveness? Because it's not all romantic and you know, bed of roses, these investments. There is risk, as Boris had mentioned as well. So far, we think we have a highly optimistic crowd, getting a little more realistic.
Optimism is good.
That is good. It's a healthy optimism as well, Frannie. I think we can end the polling in 5 seconds. 5, 4, 3, 2, 1. And I said, you know, I mean, it's tipped the balance towards really, as you mentioned, Frannie, optimism that, you know, however the risk is, I mean, there's a spirit of the younger generation being more innovative and trying to take more on these risks to create some value, especially at the, you know, lowest level society. So I think that reflects that optimism. So again, our audience, thank you very much. And now let's move on to the questions. Atem, thank you for taking Lade Araba's question. She did also say that this is a very engaging discussion, and that's the same comment we've gotten from a lot of the participants. One of them, Miguelito Abrazaldo, has made a question in terms of, you know, a very basic question in terms of what criteria is the best criteria to use for sustainability measurements. I mean, we've talked about it in general. We've had some anecdotal evidence. ESG is one of the ways banks are looking at. What would you, as both an investor and also as a practitioner, say would be the top 3 criteria for making an investment sustainable? Let's start with Frannie, you, and then Boris, and then Atem.
Thank you for that question from Emilito, and I think it's a very important question, and it will link back to the earlier one made by Lade. There are multiple criteria that one looks at, but as an investor, because when you're investing, you have to have a return that then can be regenerated and replowed into other investments. You look at sustainability from the point of view of, is the solution being proposed creating a long-term chain of value that would be visible and in demand in the long term? So I think that's the number 1 criterion, is value chain or value creation of a value chain. The second is how solid the innovation that is proposed is, and if it's not very solid, is there opportunity for learning? Because I think that is very key, because repairing, learning, refurbishing, upgrading, those become very important determinants of success. And then the final one, and I think this one is really very critical in terms of all the examples that we have discussed, is there immediate and sizable or scalable demand today for that service or product? Because then you can start small and you can scale. And I think these are the 3 criteria that as an investor you would look at. Of course, there are others because different types of investors have different points, but the minimum is having a rate of return that generates results, but also financial returns, because without those financial returns, you cannot reinvest and you cannot crowd in other investors. So it's equally important.
Thank you, Frannie. And Boris and Atem, could you add on in terms of your view as what would you know qualify and really come into your stringent criteria of sustainability?
I'll just add one point, because I think Frannie's done a good job, especially in terms of projects of analyzing the impact. And I think I just want to underline, you know, the product needs to be able to sell. It needs to be a solution that's viable, i.e. on the cost side, unless it's being subsidized by the government. And so the viability of the business itself needs to be there. It needs to be a sustainable business that can continue to produce and service a product, and do that at a reasonable margin that allows for the company to reinvest in production and in R&D to improve the product. And if the company, and usually, the conversation has to be really with, not just with the senior management, but also with some of the engineers on the ground. And if they are all kind of pulling in that direction, then I think a company is well positioned, from a product and from approach perspective, to as an investment.
Okay, great. And then at the end of the pragmatism will rule. However strong the narratives are, at the end of the day, it's got to make money, it's got to attract investment, and to be sustainable. Atem, your view in terms of what would make.
I fully agree with Boris and Frannie. They set the stage. Let's, for the sake of time, move to the next question.
Great, thank you. And we do have one last question from Sanjay Kutan. I mean, this is really pertinent to the energy sector. So thanks, Atem, for that. And that one is, and his question is from Sanjay. Most countries price electricity and energy from conventional sources with subsidies, like externalities. That makes RE-generated price points not a level playing field and make investment risk on returns higher. Pricing correctly without political bias is important. How do we get governments to do the right thing regarding pricing energy with these externalities? Now, I'll start with you, Atem, and then we can move on to Boris and Frannie.
Well, first of all, if it takes you billions of dollars to fly Apache helicopters over oil fields and have marine military, the Navy of India or Navy of Pakistan or China or United States floating on the oceans, not to defend geographical and political borders, but to defend oil tankers, that is paid by the Ministry of Defense of this country, and that is not reflected in the price of oil or the price of these things. And these ships are being deployed over the oceans to protect a dirty fuel out there, right? It is not, when you look at the satellite, you look into intelligence information and you see how much Navy's role is dedicated, and private security companies in the billions of dollars. That money is not priced into oil. So talking about oil pricing, Dr. Sanjay Kutan is very right when he says that, it's a political thing. It's a mismatch, non-connectedness of budgets in governments that oil together so-called leads to securitization of supply chains. And those prices are not reflected in the price per liter of diesel, the price per liter of gasoline, or the price of coal. It is not reflected. So when you talk about pricing, I mean, actually today, we don't even need to convince too many people out there, because the price is a reality. It has reached the price of equal to and even below the price of fossil fuels. We are already there. That's why you see the investments are moving towards renewable energy, and even the big companies such as Boris just mentioned are buying clean energy out there. Now, on the pricing side, I do see that I think there is a political economy. In the World Bank, we used to call it sort of a nice word for corruption and bribes and things that are interrelated to families and supply chains. If we as a company would tell an organization like the PLN in Indonesia, the power corporation, the state-owned power corporation in Indonesia, that we can help them saving, let's say, 11 million liters of diesel every year, we think it's good news. Well, for some people who are depending on the diesel imports and those bribes that are being paid in the supply chain to everybody, or let's put it more polite, the political economy that dictates that taxes needs to be paid and all these other things, so-called commissions needs to be paid, we are hurting a supply chain. We are hurting a network of business people. We are killing another person's income out there. So this is the tension, and energy is about politics, because those people who have been selling those 11 million liter diesel a year, they don't believe in this climate change thing. They don't believe in ESG. They are protecting their turf. They're protecting their business. So it won't happen unless we vote differently, unless we choose our leaders, unless we change our captains of industry who believe in these things and who can do the right things when they are in the positions where they have power to make that change. So yes, I do agree with Sanjay that you know, governments need to make decisions based on the merits, based on what science is telling us, but unfortunately, it is not happening. So we got to use power. We got to use politics to fight the fight from the other side as well. Otherwise, things won't change. So vote differently, I would say. Okay, thanks, Atem. And really, an evidence-based policy that takes into account externalities is really the way to go, especially when it comes to making renewables have a level playing field to compete against fossil fuels right now. Frannie and Boris, I'd love to hear your thoughts.
A quick comment from my side. When you look at what has happened now with the collapse of the oil prices, many countries have used this as an opportunity to remove subsidies that were going to these sectors. So if you take countries like Nigeria and others, they've used this opportunity to say, okay, the prices are low, let's remove the government subsidy and then we'll go from there. And I think this is going to create, in the long run, a more even playing field for renewable energy, because it will not be competing with the subsidized fossil fuel-based energy. The second, I think that's really critical, is how governments can use subsidies to support new technologies. And I think here, when you look at what it was mentioned earlier, the role of Japan, Germany, and others in bringing down the cost of solar energy, and the fact that those solar panels were manufactured very efficiently in China, in the United States, and that brought down the cost of an individual panel. So when you look at the combination of government subsidies on the one hand, and private sector and innovators inputs on the other, together they brought down the cost, and now we are able to distribute those panels and create micro solutions that are affordable at different levels. And then finally, I think the role of government is in allowing ideas to flow, because a lot of these innovations can be found in pockets. And when you don't have a chance to actually learn about them, because usually price in the market is what speeds up innovation, or knowing about an innovation. But if you don't have that, because these are tested at very micro levels, there's a very important role of government in using grants and other incentive mechanisms to get ideas flowing so that innovations get known.
Thank you very much, Frannie. And Boris?
Just two quick thoughts. I mean, clearly a carbon tax would help. And the Europeans are trying to institute it. And if you were to spread that out globally, it would provide proper incentives, and it would be well, there would be disincentives for using fossil fuels, and it would naturally shift the demand. The second one is the financial markets are already doing this. The cost of capital for new oil exploration is actually quite high. Green bonds to finance renewable energy generation capacities are quite low. So we're actually having already a subsidy put on by the financial markets for renewable energy. And so when you look at the demands for bond returns, green bonds actually demand much less, and oil bonds are much more expensive. So I think that one is the calculation. It's about an $80 difference per ton of emissions. Which actually has often been cited as the proper price for charging emissions. To compare that, it's currently about 25 euros is the emission charge in Europe, which is a traded one. But it's the cost of finance has already adjusted, and that already kind of will forecast how much capacity will be built in one and the other.
Thank you very much, Boris. And you know, I think, you know, as the audience is certainly absorbing, you know, the breadth and depth of this discussion, while we're doing that, I'd like to use this opportunity to also take us forward in terms of the next webinar we're going to have in September. And while the interest is fresh, this will always springboard to new topics. So we want to put a poll before we close today on time, I might add. And that poll question has a lot to do with, or solely has to do with the question, with the topics we're going to do in the next webinar. Okay, poll question, please. All right. You've got a number of choices out there, and it would be great to see which one you'd like. We'd like to be democratized access. This is a good way of getting a pulse in terms of where you want us to take the discussion forward, given the robust discussion today. It's nice to see the options competing against each other. We don't have a clear winner yet, but that's always good. I think that's the kind of discussion that generates this kind of dynamic in terms of where they want to take it. Okay, we have 5 more seconds. Okay, 5, 4, 3, 2, 1. And by a whisker, we have renewable energy, solar, wind, tidal, and bio. I see Atem smiling very much. It's up your alley, Atem, and I know we're going to have a lot of experts talking about that next time. But you know, I think on that note, and I just want to close the seminar with a note of thanks to our distinguished panelists. You really brought different dimensions to the sustainability discourse in terms of not only what the market is looking for, but the kind of incentives and dynamics that's really gearing capital towards these critical sectors, these emerging markets, and these last mile delivery solutions. And to re-echo my boss's words, and this is a level playing field that government should take as a clarion call to make sure that the little guy, the most marginalized communities, has access to that kind of democratized capital that is being experienced in other communities around the world. So with that call to action, I want to say thank you very much to our panelists, Boris, Frannie, Atem, thank you very much to our team, and more importantly to the audience for such a robust, wonderful discussion. More of your questions can be answered at the email indicated in the chat room at webinar@WEnergyGlobal.com. And with that, I would like to say thank you very much on behalf of WEnergy Global and our partners. My name is Kintan Pastrana. Thank you very much.
Thank you.
Have a nice day.
Thank you.
Bye.
Thank you very much.
Thanks all.
Bye-bye.
Take care.